संजय जैन सर आपको पूरा एक्सप्लेन कर देंगे सर। FAQs ड्यूरिंग द ट्रेनिंग सेशन कैन बी एज राइट सर?
यस राइट।
ड्यूरिंग द प्रेजेंटेशन किसी को भी अगर क्वेश्चन है, क्वेरी है, दे कैन आस्क। इंटरेक्टिव सेशन रहेगा। मनु मैम आप डेफिनेटली क्वेश्चन पूछिएगा।
GST provision especially applicable to SEZ because GST provisions are very big, so it can't be discussed in such a short duration. But we'll discuss what are specific provisions which are applicable for SEZ. So the focus of presentation will include registration, levy, scope of supply, nature, place of supply, ITC, returns and refund. So each SEZ unit is required separate registration, whether unit developer or co-developer, because there may be some co-developer also in GIFT SEZ. So whoever start business, there may be possibility that someone is already having office in Ahmedabad, they have taken registration in Gujarat. But whenever they have to start any business in SEZ, they have to take separate GST registration for SEZ business. Most of you already have taken SEZ separate registration. If some of you are new and you have not taken, you can apply it. And you can also check the SEZ registration should have flag of SEZ. It should not be a regular registration. Because if SEZ is not marked in your registration, then you may face problem in getting zero rated supply. Because supply to SEZ is always under IGST, whether under LUT or not. But if it is regular, then say your supplier will face problem in filing return and if supplying goods or service to you. So levies, so GST is levied through section section 9 scope. There is a supply or the GST Act has been defined through CGST Act, SGST Act, IGST Act. So many of the definition will come CGST. Place of supply related provision will come through IGST Act. So the rates are notified by GST by government on recommendation of GST Council. Petroleum products are still out of GST, although they are part of GST, but the dates to be notified in future upon recommendation of GST Council. In case of some items or goods or service, GST is paid by recipient under reverse charges. Like so when we are discussing reverse charge, many of you may be aware. Recently, government has introduced RCM on commercial rent, and residential renting is already covered under RCM. So is there any issue being faced by any of the unit due to RCM on renting? I think there will not be any issue because supplier of service are already registered. So in case of commercial rent, RCM will be applicable if supplier is unregistered because in all the units will take premises from co-developer or co-developer who are registered under GST. So it will come under forward charge and mostly it will come under LUT only. So RCM, so you may not face problem. But if you hire, suppose you are working in SEZ, you have set up a SEZ unit. If you have taken a guest house in Ahmedabad city for your guests who are coming, then you may require to pay RCM on such guest house if you are paying rent. Supply is, so section 7 is defined, supply is covered under as per section 7 and supply includes sale, transfer, barter, exchange, lease, disposal, various form of supply are given and supply to SEZ is zero rated as per section 16 of IGST Act, similar to exports. So section 16 of IGST Act defines zero rated supply, which includes supply to outside India for export and supply to SEZ. So earlier there was a no condition for authorized operation when GST Act was introduced, but subsequently the condition has been incorporated in IGST Act. If any supply is made to SEZ, unit developer or co-developer, it should be for authorized operation. Because many times we get a question, supplier is supplying food item to canteen, whether can we get benefit of LUT on such supply, or supplier is supplying car to SEZ unit for their personal use of director. Since these activity does not fall under authorized operation, so you may not get benefit of IGST. So you have to pay GST on such supply. Supply similarly, so it is zero rated for SEZ unit are getting supply. So that is also zero rated. SEZ unit is also doing export, that is also zero rated. So your both transaction are covered, inward transaction as well as outward transaction under zero rated provision. So they under section 16 provide you flexibility. If your supply is zero rated, then you can charge GST, claim the refund, or alternatively you can supply to under LUT if you are doing export. Similarly, your supplier who are supplying goods or service to you, they can supply goods or service under LUT to you, or they may charge GST and then they can claim refund. If they are charging GST on their invoices, then you have to get the invoice endorsed from custom officer that goods and services are received in SEZ. Based on that endorsement, your supplier will file refund claim and they will get the refund of IGST on goods or service supplied to you. Even if they are supplying under LUT, still they can file the refund for their input credit. Sometimes one SEZ unit provide service to other SEZ unit also within same SEZ or other SEZ in India. That supply is also zero rated. For supplier unit, it will be counted as export. For recipient unit, it will be counted as import. So when we see supply, there are 4 types of supply: taxable supply, nil rated supply, exempted, non-taxable, zero rated. So everyone understand what is taxable supply means. Some tax has been charged. But is there any difference in nil rated or zero rated or exempted supply? Can anyone answer? Unmute and answer. Is there any difference in zero rated and exempted or nil rated supply?
Sir, nil rated supply is where the GST rate is zero. Exempted supply is a supply where it has been specifically exempted by the GST under the Act, and it can be it can become a taxable supply if notified by the government. A zero rated supply is only specifically defined under Section 16 of the IGST Act, where it mentions that any supply to SEZ unit or developer is a zero rated supply. So I think that's the difference.
Is there a specific benefit in zero rated supply in comparison to exempt or non-taxable supply?
Sir,
you can take input credit against the zero rated supply, whereas exempted you cannot take input credit.
Yeah, very good. So zero rated supply is treated equivalent to taxable supply only, although there is no tax. Because of you are supplying under LUT, so you can avail all input tax credit against zero rated supply. But if it is exempted supply or non-taxable supply, you are not eligible for input tax credit on such supply. Even if you are availing some common services also, then also you have to reverse the input credit proportionate to your nil rated turnover or non-taxable turnover or exempted turnover. But zero rated, you are eligible for full input credit. For zero, then further we have to satisfy the condition of export for goods and services. So there may be different definition of export under. Sometimes we get question that foreign trade policy or SEZ, people say they see rule 53 formula of NFP. that if we are supplying to other unit, it is counted as export. If we supplying to this, then it will be counted export. But as far as GST is concerned, export means taking goods outside India. So you may be, while filing NFP or SEZ return, you may be treating a particular transaction of goods as export, but for GST purpose, unless goods is moved out of India, it will not be treated as export. So you may face liability of GST if a goods has not moved and you have treated it as export. The export of service, there are 5 conditions. You have to fulfill all the conditions. Supplier of service is located in India. Maybe you are located in gift SEZ. Recipient is located outside India. Place of supply is outside India. Place of supply also you have to read section 12 of IGST Act. Section 10 to 13 are for place of supply. 10, 11 is for goods, 10 is for domestic supply, 11 is for international, import and export. Similarly, 12 is for domestic supply of services, 12 is for international supply, domestic supply of goods and services. Section 13 is international supply of goods and services, where one part is outside India, one is in India. So place of supply, there are various conditions are given in 12th, around 8, 9 conditions are given: performance-based service, immovable property service. Suppose one company from US appointed a consultant in India, property situated in India only. A payment is received in foreign currency, but since services performed on a property in India, so then place of supply will be treated in India. Although you are getting foreign currency payment, it will not be treated as export of service, and you have to pay full GST on such supply. So whenever you are doing any service supply, so you have to check whether your place of supply fall outside India. That is very, very important. You need to read section 13 of IGST Act. So what type of service you are providing, it is falling. So there is a clause, general clause, all type of service, it will be treated outside India except these. So you have to see if you are you following any exception, then your place of supply may be in India, otherwise it will be treated outside India. So if you are providing any commission-based service, intermediary service, then also it is place of supply is treated in India only, and you may require to pay GST on such supply, unless it is exempted. So payment should be received in convertible foreign exchange, unless otherwise permitted, like RBI permitted for Nepal, Bhutan, you can receive payment in INR. Supplier of service and recipient of service are not merely establishment of distinct person. Suppose a company is in Dubai, open a branch in a gift SEZ, and branch provides service to head office in Dubai. So they are establishment of same person. So then it will not be treated as export. So you have, so in that case, we suggest whenever any company opening branch outside India or in India, they should incorporate separate legal entity. So then it will be treated a different person. Otherwise, it will be treated, if it is a branch, then it will not fall in definition of export. Any question?
But in case of a subsidiary or finance company in SEZ, it will be fall under this category?
The subsidiary means legal entity is different. Yes. So if it is separate legal entity, then it will not come in that clause. But if it is not separate legal entity, is only merely a branch, then it will fall in this clause.
Okay.
So then authorized operation, IGST Act say zero rated supply to SEZ will be zero rated for authorized operation. But that does not define authorized operation. Then you have to refer to section 2C of SEZ Act. It has been where authorized operation has been defined. So, and they say as per section 15.9, so every unit will get a letter of approval from the development commissioner. So whatever operation has been specified in letter of approval, that is authorized operation for the unit. So unit can get benefit for those authorized operation. For developer, co-developer, generally there are default operations, and then they may require to get a list of goods approved from the UAC. Whenever they have to buy any goods, they have to submit list duly approved by charter, certified by chartered engineer, then DC will approve it. Place of supply we have discussed. For it is different, go for goods and for service. Section 10 for domestic, import, export 11, IGST. For service, section 12, domestic, international 13. So there are various classification based on where goods are made physically available, service related to immovable property, performance-based services. Services supply in more than one state. So if one contract is given, suppose like railway is giving one contract for repair, railway track repair, which is running into multiple states, single contract. So then how do you define? Because each state you have to pay separate tax separately, or if you have given one advertisement contract, advertisement is applicable, benefit will be received by all the units registered in different states. Then how you define place of supply for such single contract? Banking service, transportation service, online information and database service. So there are different rules related to place of supply. So for that you need to study the rule and check whether you are properly interpreting it or not. Because if you wrongly take a position that place of supply is outside India, since you are getting a payment, your customer is outside India and payment is received in foreign currency, you may face a problem in audit. When GST audit will come, they may raise a demand, disallow all your supply, and they will recover GST with interest. So we have also discussed whenever zero rated supply there, you need to file LUT also. Hello. Please keep mute. If you are asking question, then only unmute. For zero rated supply, it is also essential. You should file LUT, you or your supplier. Suppose you are receiving some goods or service from your supplier who is situated in Ahmedabad city, then you should advise to them also to file LUT online. Sometimes SEZ unit get confused. The bond come LUT and LUT, both are different. Bond come LUT is with Development Commissioner and Custom of that SEZ, and LUT of GST is separate, which is filed online on GST portal. So LUT is to be renewed every year, GST LUT. Irrespective of bond come LUT, both are different compliance and unit has to fulfill both compliance. So you need to file LUT on GST portal for GST, and all your supplier who are not charging GST to you, they should also file LUT before supplying to goods or service to you. And whenever they are issuing invoice to you for goods or service on benefit of zero rate is taken, they should quote LUT number also on their invoice.